So Josh, fixed versus a floating rate, often called a variable or an adjustable rate. Can you maybe explain what it is, how they work, pros and cons of them?
Yeah, absolutely. Let's start with the fixed.
Okay.
The fixed is a set it and forget it kind of approach.
Right.
Really good, I find often for the first time buyer or someone who's just nervous about fluctuation in payments. Generally a nervous person, right? But that all depends where rates are. If rates are really low, it can be a good strategy. Rates are a little higher where they are today. I see it's a really divided camp.
Right.
So with the fixed rate, again, you fix that rate for a set amount of time. Thus your payment is set it and forget it, right? Whereas a adjustable mortgage, often referred to as the variable rate, that payment can fluctuate with prime rate. So I know a lot of people are worried about what can happen with the prime rate. In recent history, we've seen that prime climb quite significantly.
Right.
We're at a time now where we're expecting to see prime come down. Thus, payments should come down, but it's really not for everybody, right? It's for the one who does believe that that prime rate could go lower, and maybe they'll hedge their bet that they're going to beat and outperform what that fixed rate option could be.
Okay.
Benefit to the variable rate is it often comes with a lower penalty. If you want to break that mortgage, you can only ever typically have a 3-month interest penalty.
Right.
Whereas these fixed rates, sometimes we'll see what's called the IRD, the interest rate differential, where they're comparing posted rates versus discounted rate. It's a little bit of mortgage madness there, but you can see often 3 times the penalty versus the variable, right? So really it's important to have a conversation with people, your clients, and educate them on what each product is, and what might be the pros and cons to both, and really what they're looking for.
Right.
Anything to add to that, Joe?
So it's just kind of variables, maybe a little more flexibility, but some risk.
Yep.
Fixed rate's going to give you a little more security, but I guess there's also risk with that too because of the penalty stuff that you're talking about.
Yeah, absolutely. If we see these rates continue to go down,
Yeah.
you might have some people in a fixed term that would like to get out of it, and they might have a big penalty in doing so. So,
Right.
but yeah,
But it's not one size fits all, obviously.
it's certainly not. No.
No, I got nothing else. Thanks for the explanation.
Yeah, no, my pleasure. If you have any questions, please don't hesitate to reach out to a mortgage broker. We're here to help and always happy to answer the phone.